everyone. Welcome to this webinar where we're going to be looking at a whole range of issues relating to future-proofing SMEs. I'm Peter Towers, Managing Director and Founder of ESS BIZTOOLS. Welcome. If you have any questions on any aspect of the matters which we are discussing in this webinar, can you please send me an email, peter@essbiztools.com.au. It all starts with a plan. When people go shopping, they normally have a plan, otherwise they may overspend and be embarrassed at the checkout. Business plans for business people are similar to maps for tourists. They're part of the pre-planning. If you don't know where you're going, how are you going to know when you get there? You might have gone past where you were aiming to spend the night. The plan enables you to monitor your current position as compared to your original plan. This is very important for business people to know where they are after week 6 or week 8 or week 10 of the financial year. What did they plan to have achieved by this, and what have they actually achieved? And if there have been variances, strategies can be determined to correct the anomalies. This is one of the most important parts of the delivery of value-adding services by accountants and bookkeepers to SMEs, being able to assist them in the identification of variances, anomalies. What caused them? Why did they occur? Was there a problem in the original budget? Is it what needs to be fixed? Or is the problem in the actual execution of the budget framework? Was a mistake made? Has there been fraud? There can be all sorts of reasons. The main thing is that your clients need to have this brought to their attention now, not in 6 months, 12 months' time. It's too late then. This problem may have continued every day ever since, and it could have cost your clients a lot of money. The plan should be facilitated by the accountant working with the leadership team in a series of think tank meetings. These meetings are there for you to analyse what's happening in the business, what needs to be changed. And it's vital to have the leadership team members involved in that process to be meeting and discussing issues relating to the performance of the company. So as part of that, the leadership team needs ownership of the plan. I don't think an accountant should just go in and prepare a business plan. That's easy. Any of us can do that. But the key part and the real professionalism that you need to bring to it is to produce an agenda, and we've got agendas for virtually every contingency that we can think of within the ESS BIZTOOLS product package that you would use in the business planning process. And encourage the leadership team members to comment and then commit themselves to particular strategies, because the final business plan has to be their document. They need ownership of it because they are the people responsible for the implementing of it. You may well be part of that overall process, and hopefully you will be, but mainly to monitor what's occurred, to bring to their attention the variances and help to explain what caused the variances. But please just don't go off and prepare a business plan. That's how it used to be done. There were government grants which encouraged us just to go off and prepare a plan for someone with not much input from the client. I don't think that was right. I think it's far better to get your clients involved. See, your sessions that I'm calling the think tank meetings might only be 2 hours, 3 hours probably maximum, with breaks every hour. Because a lot of these people are not used to sitting down at a desk for hours at a time. And their mind will be worrying what's going on out in the factory, in the workshop, in the shop, on the farm or whatever their business activities are. So try to do it in short bursts. If you think the whole thing can be completed in 6 to 8 hours, you could probably have a 1-day session or maybe a 1.5-day session, because you want the leadership team members to be energetic and fresh and not just sitting there yawning and saying, I hope this finishes soon. You need to get their real input. And then your role is to document it. The agendas which we've prepared, I've listed them on the screen. There's quite a number of them. Review of the business, financial analysis, where is the business now, the objectives, the resources, the uncontrollable factors. Every business has got uncontrollable factors that are in the hands of governments or other agencies. Well, we need to acknowledge those and realise that there's really nothing much we can do about it. Technology, what's going on with technology? Products and services, that's very important. Industry and market analysis, very important. What's going on in the industry? What are other people doing? For the last 2 days, I've been attending the AI webinars that were organised by Accountants Daily, an excellent contribution. And one of the surveys that was undertaken indicated that 72% of the participants, and there were a couple of hundred, had indicated that they didn't know too much about AI. We were all, including me, at the very beginning of this process. What's your position? Do you understand AI? I think the message out of that 2-day workshop was that AI is definitely here to stay, and accountants and bookkeepers will ignore it at their peril. So you need to find out what was going on. I was disappointed at the numbers. I thought they would have attracted far more than a couple of hundred people. Maybe the rest of the profession understands AI, but I somehow doubt it. What's the experience? What's the customers and clients? Who are they? Where are they located? Do they pay regularly? What's the debtors' days outstanding? Location, your competitors. Do you monitor competitors? Do a competitor SWOT analysis as part of the business planning process. Where can your client better compete with their competitors? Marketing. We had an interesting session yesterday of utilising AI in marketing activities. Quite interesting what can be done. Your client's going to fall behind because they don't understand these new technologies. Advertising, production process, suppliers, how they quote proposals and orders, their internal costings. Who does them? Perhaps that's a role for you, because in a larger organisation, it tends to be a role. The costings are part of the accountant or the chief financial officer's overall section. Pricing, packaging, sales, distribution, operating the business. How's the business operate? Exports, team development, team training, imports. And we've got a couple more: human resources, debtors, stock, work in progress, benchmarking, taxation records, bank relationship. Incidentally, you might notice there on taxation, I've listed about 35 other items, and then one of them is taxation. The point I'm trying to make is that your clients have got a lot of other things to worry about besides taxation. It's one of them, of course, but it shouldn't be the sole endeavour that an accounting or bookkeeping firm is supplying. In fact, one of the speakers in the AI conference yesterday, who I found very interesting, indicated that all of the current work that accountants and bookkeepers have been doing under the taxation heading is basically finished. Within a couple of years, it will all be absorbed by the technology. It's worth getting a copy of that webinar session that was presented at 1 p.m. AEDT yesterday to listen to it and analyse it. Bank relationships, periodic financial accounts, absolute necessity every month for every business operation that your client's got, so that the all-important comparison to budgets can be prepared. Business funding. Is the forecast showing that the business is going to run out of money? Well, what's going to be done about it? That's why you're doing these forecasts, to ascertain these things and to start planning now what will be put in place, because you will not raise $500,000 or $1 million in a short period of time. It needs some planning, needs some work. Research and development, very important. But are your clients undertaking research and development? If so, are they claiming the taxation advantages? Are they even operating a company? Because they have to be to get the real benefit of research and development. And do they understand the processes? And do you understand your role? And a few accountants over the last couple of years have said to me, oh, Pete, we're not scientists or engineers, so we're not going to get involved with research and development. I say, hang on. You don't have to be a scientist or an engineer. You're not conducting the research and development, your client is. Your role is more akin to being an internal auditor. Within the ESS BIZTOOLS system, there are 46 forms for research and development. Now, not one client's going to need 46 forms. In fact, maybe if you've got 10 to 20 clients using the research and development system, you may have needs in a couple of times to use all 46 forms, but it'd be very unusual. But we've put them in there so that we've covered every contingency that we can see in the legislation and the rulings given by the tax office and Oz Industries relating to research and development, so you know what to do. So your role, I think, is to, as the internal auditor, to make sure the clients completed the forms. Some of them have to be completed daily. Timesheets. What did the team members do today? What did they work on? Because we are charging their labour into this special account called research and development that the Australian government's going to give your clients specific benefits from. So you've got to be able to justify it. And the time records must be prepared. That is the role I see for you, not sitting there writing up what the research results show. That's your client's responsibility. You will not be there when the research activities are taking place unless it's just very, very coincidental that you're there. Insurance, quality assurance, business structures, board of advice, board of directors. Board of advice is becoming far more popular as companies try to grow and scale up. They need more input, but they need to be serious business activities, not a couple of alcoholic drinks and sitting around having a discussion. Serious meetings, payments being made to the board of advice members, because you're really paying for those business people's brains to bring them to focus on your client's business. Board of directors. Obviously, if the company is going to grow, if it's going to raise capital from the public, it needs to have a functioning board of directors. And there needs to be reports being submitted to them every month so that they can have an informed discussion. Advisors, who are they? What's their role? Legal advisors, public relations, management, risk management, a huge area. We left that for second last. And then the SWOT analysis, the all-important, making sure your client really understands what their weaknesses are and what the opportunities are, what could be done in this marketplace. It's a fair bit in a business plan. They're the key items. So our product packages include all the checklists, papers, and guidelines that you need to prepare a business plan. And you could commence this assignment within 2 weeks of subscribing to ESS BIZTOOLS. We're going to tell you this on each of our products because someone contacted me recently and said, oh, if we pay our subscription, how long before we start getting some of the money returned because we're earning fees? That was a great question. And I thought, well, we can tell people that. Business planning is a process that you have hopefully learnt at university and in the PY courses. You'll be able to utilise those skills. ESS BIZTOOLS' role is supplying you with the documentation to record everything. which you probably haven't got. And we do have these types of training videos in the system, which will alert you to various items. What does the business plan mean in financial terms? This is explained in predictive accounting reports. In the early 2000s, I was a consultant to a very special government program that was delivered by people from the free enterprise community. It was when John Howard was the Prime Minister, and he'd insisted that the people who were called the Comet Business Advisors had to be people with real business experience. So I was part of that. So part of that was we would get consultants to prepare business plans and budgets and cash flow forecasts for our clients, because the end objective was for us to get them investment ready so they could raise capital for their new innovative ideas and processes. And some of those companies are still going very well. I'm very happy to comment. But at one occasion, I found that the client had insisted on two separate consultants being involved, one to prepare the business plan, the other one to prepare the budgets and cash flow forecasts. And when I read them, it was like reading two different books. The business plan outlined all sorts of objectives. When I read the budgets and cash flows, there was no connection whatsoever to what was in the business plan. And I spoke to that consultant that did the business plan. I said, "Did you even read the business plan?" He said, "Oh yeah, I read it, but I thought it was rubbish. So I've done it my way." I said, "Hang on, we're going to present these documents to potential investors. This client's going to try to raise $1 million from the public. We cannot present a business plan saying one thing and then a budget and a cash flow forecast having no connection whatsoever to the objectives." And this particular gentleman just turned around and said, "Well, that's what I think." I said, "Well, you were told that it had to be based on the business plan, so I'm not going to recommend that you get paid." So this is one of the issues we need to consider. Even in your own organisation, you may have someone coordinating the business plan and someone else doing the budgets and cash flow forecasts. Please make sure they communicate, and that the predictive accounting reports, which is the budgets and cash flow forecasts and some other documents, are all linked back to the business plan. So we need the budgets for each individual business operation. Please don't consolidate your client's activities. Please spread it out into the individual business units. So if your client's got 3 retail stores, a wholesale business, a factory, and an office, well, I think that's about 6 separate business units. We have 6 separate profit and loss accounts. We're going to have 6 separate budgets for each of those activities. Why? So we can analyze where a problem might be. It's very difficult when everything is consolidated together into one profit and loss account to then decide what the problem area is. It's all right if you've only got one activity, you've got one little shop and that's it. Well, obviously you've only got one. Although some people might divide it into the departments, but that's another story. But if you've got numerous business activities, it is far better to break it down right from the start, from the budgets and the cash flow forecasts, so that it flows right through the accounting system as well, so that you can really analyse the performance. And the key drivers of sub-accounts. This is important. Some of these things can get hidden in the budget papers and no one's really aware that they're there. So what are they? The key drivers, the material inventory, raw material inventory, which might go up a bit because of shipping delays or problems, especially when products have been brought in from overseas. We've got 2 unfortunate wars going on at present, and that can complicate deliveries. And it might mean that there's going to have to be an increase of investment in inventory at various times so that your client's got enough raw material to undertake their production. What's the cash flow effect of all that? So by having inventory is a key driver. It's enabling it to be closely examined, to look at the investment. If originally in the budget, the investment was shown at $400,000, but the financial accounts are showing 3 months later that it's gone to $750,000. Wow, where did that extra $350,000 come from? Now, it might be still in creditors, but I got doubts because I don't think you're going to be able to import product from overseas suppliers without paying for it. And the same thing is probably going to happen to many Australian suppliers. So the completed stock, the debtors, the work in progress, creditors, capital expenditure, research and development projects should all be identified within the key drivers, separate ones, so that we've got separate targets, so that throughout the year when you are analysing the balance sheet, the actual balance sheet, and you're comparing it back to the budget figures, you're going to be able to look at these key drivers to determine whether they're causing cash flow problems, because everything comes back to the cash flow sooner or later. So we've got the cash flow forecast, so it's all linked, of course. And then we've got the projected balance sheet. I think it's a great document, the projected balance sheet. It's showing what the client's financial position is going to be in 1, 2, 3 years' time. 3 years is probably far enough to go forward for SME businesses. But you can then be the commentator on what this business is going to look like. Obviously, there's going to be some qualifications. It's subject, of course, to performing in accordance with the business plan over these next 3 years. And perhaps there's going to be a capital raising activity. There's going to be a major research and development project that's funded. There's going to be perhaps opening a new factory or a business somewhere else. They're all covered in the business plan. Their financial details are shown in the predictive accounting reports. And then, wow, this is what the balance sheet's going to look like. So you can be the storyteller. You can say to your clients, this is what your business is going to look like in 3 years' time. Are you happy with that? Now, the client might sit back and the leadership team might say, oh, I thought it would have been a bit better than that. We've still got debt and we've still got, well, you then sit down and explain it to them. You can be the storyteller, but you need to make sure you clearly understand all the components of the whole process. And this is where you're bringing your knowledge, your experience, your expertise to assist your client to really understand how all these various factors all come together. And they definitely do in the projected budgets and cash flow forecasts. Okay, let's move on to something else. I've mentioned a couple of times that we might need to raise some capital. Where would you raise capital from? Well, crowdsourced funding. Equity raising is a smart alternative to borrowing money. Why is it smart? Well, you don't have to have security. You don't have to meet interest rates. You don't have to repay capital. There's a few things you can think about there. So private companies or unlisted public companies with turnovers less than $25 million Australian on a worldwide basis and with gross assets of less than 25 million Australian dollars and not listed on a stock exchange anywhere in the world are able to go through the process to be deemed to be a crowdsourced funding equity raising company. Are you aware of that? Because I find a large number of accountants that I talk to really are not aware of it. Over $450 million has been raised by Australian private companies and unlisted public companies in the last 7 years since this process got underway. It's a great way for your clients to raise some money. Now, they need to have a business vision. They need to have the key documents to enable this to happen. But they can raise $5 million in a 12-month period, subject to approval from the crowdsourced funding intermediaries, which are businesses with Australian financial licenses that the Australian Security Investment Commission appoints as crowdsourced funding intermediaries. The directors and the management team need to be aware of how all this works, so they need to be mentored. And don't worry, we've got a complete package for you to assist you to deliver the mentoring and advice to your clients. You need to understand the crowdsource funding intermediaries role. They wear two hats. One is as the representative of ASIC. So you need to make sure your clients understand that they are the people who decide whether your client qualifies as a crowdsource funding equity raising potential company, and then work with them. And then secondly, they are a promoter. They're marketing your client then to the marketplace. But they do wear two hats. So the company's going to need some documentation, the business plan that we just talked about, and the predictive accounting reports. They're vital. Obviously, those two documents should embrace the company's vision, but you are always well advised to summarize that separately. And some of this will need to be put into videos and presentation document. You need a valuation because you're going to be issuing shares. You need to determine how much money your client needs to raise. It might be $1 million. But what's that going? How many shares are going to be allocated? What are those shares going to be worth? That's got to be calculated on the current valuation of the company, and what's it going to be after we raise the $1 million. And they need a very important document, which is called the crowdsource funding offer document. It's stipulated, in the legislation. And it's an equivalent, if you like, to a prospectus, nowhere near the formalities of the prospectus for a public company capital raise, but it's an important document that the intermediary has to accept. So it's got to be submitted. It can't be prepared unless you have those other documents, the business plan, the predictive accounting reports, the corporate vision, the valuation of the company. So it presents great opportunities for accountants. Now, I'm saying here that if you're familiar with those processes of business plans, predictive accounting reports, valuations, and with our material, you could probably launch this within 3 weeks, but you're going to be going through a time frame with your clients. You need, first of all, to do some mentoring and advice to them to show them how all this works. But you could be underway. Research and development presents tremendous opportunities for innovative SMEs. And there's thousands of SMEs undertake research and development, but I have difficulty finding accountancy firms that service SMEs that indicate to me that they undertake research and development assistance. Our product package covers the full distance from the initial inquiry. I understand that one of my competitors has received a research and development benefit. How can I get some of this? I can just envisage, and I've had people put similar sort of questions to me over the years. But I imagine you might have some of your clients that you're smiling now and saying, I can just see Jimmy asking me that, or Mary asking me that. Some people get very jealous of some of their competitors that seem to be able to get hold of benefits. One of the problems might be that Jimmy's business is currently a sole trader. Well, he needs to get into being a company if he's going to access the benefits. But you will have the resources to immediately bring it up on your screen and start talking to them about the prerequisite requirements. So we've got a full explanation on the research and development journey, which I mentioned earlier, as you acting as the internal auditor, as I see it, making sure the records are being kept, because there's significant taxation advantages, which we will cover in the more in-depth overview of research and development. There's a range of documentation that your clients need to complete. Where's it all start? They were just heard that one of their competitors have got got some R&D support. One of the team members has come up with an idea. It could be quite beneficial. What have I got to do? Where do I start? These are questions from your client. What are the records that have to be kept to substantiate the research and development claim? What documents do I need to have prepared for submission to the government? You will have all that information available. So in summary, what's in our package? Well, there's 13 flow charts, which we've developed to help you to explain to your client the ongoing story of research and development. You might only have to use the first flow chart for initial inquiries, and some of them might cease at that stage. The client might say, oh no, I didn't know I had to do all this. I got to undertake research. Yeah, well, someone's got to undertake the research, and it won't be you. You're the internal auditor. 12 individual papers covering key aspects of the research and development story. We don't like huge papers, so we've broken the papers down to cover specific components that you can badge with your name, and you can send that to your client progressively. And we got the 46 individual forms that I mentioned before. So these are the forms that record the results of experimentation. And one very important point that I want to mention. A few years ago, an accountant rang me, and I'd met him at a conference. We talked about research and development, and I'm sure I told him what I'm about, the process that I'm about to relay to you. He said, oh, I had a look at a client on research and development, but none of it works, so that was a failure. We can't do anything about it. And I said, I beg your pardon. And he said, I was wondering what you would say to that. I said, as long as he spent more than $20,000 on legitimate research and development in the 12 months, and is the business that's undertaken all this a company? Have they kept the records? And he was saying, yes, yes, yes. I said, he can still claim it. Doesn't have to be successful. The government knows that there's thousands of dollars spent by people on research and development, hundreds of thousands of dollars and a lot more. Not all successful. Some people work on R&D projects for 10 years before they get them to work, but they can receive the taxation benefits on the way through. That will keep them enthusiastic. So when could you start undertaking a research and development project for your clients? Well, you read our material, read the papers, read the forms. You could probably be underway in 6 weeks. You're going to have to find the clients. And I think you might be surprised how many clients you may have that are interested in research and development, because they might create a fantastic business. This is the start of the innovation journey for them. Succession planning is not just for the CEO. This is one of the other product packages that we have. So it outlines succession planning that can be undertaken for the key people. The highest priority most people think about when they're talking about succession planning is the CEO or the owner, and that's very important, but there's also plenty of other people. It applies to other team members because it's part of the internal training and promoting people within, which in most cases works out far more economic and far more beneficial to the business, because people are starting at a young age and they're progressively working their way through the organisation. They have loyalty, they have knowledge of how the business operates. So the succession planning product that we have developed, it's got all the material you need, handouts, papers, diagrams and charts for you to use, and step-by-step processes. I think you can use that within 2 weeks. So the financial forecasting product package, which is what we've embedded all this in, is full of resources to assist you to deliver. And it includes the material that's in our 3 other packages: advisory intro package, the starter package, and the advanced package. So it's all summarized into this one package. Now, your investment, which includes the Plan Guru software, which is the best software package, in my opinion, to enable the all-important forecast to be prepared, the 3-way financial forecast, which I think is actually 4-way, but generally it's referred to as the 3-way. Your investment is $9,600 plus GST for 12 months. You get the Plan Guru budget software, and as part of that, you get special training by Beyond Accounting Technologies. Paul Barnaby, a fellow of the Institute of Chartered Accountants, who's the Australasian representative for Plan Guru. He undertakes the training and gets you started. And then you've got a great package which enables you to really deliver Chief Financial Officer services to the clients that wish you to do that service. So if you've got any questions relating to the products or services supplied by ESS BIZTOOLS, please do not hesitate to contact us. You can email me, peter@essbiztools.com.au, or telephone 0747 24 118. Thank you, and I look forward to hearing from you so that we can assist your firm to get on this journey of development, to assist your clients to innovate their businesses, to scale up their businesses, to grow their businesses, and obviously to survive in business and have some fun. Have a great day. Goodbye.